Hi, it's time for a coffee break. And today I want to tell you about market intelligence. One could say there's nothing intelligent about the current real estate market, right? I mean, we have been in a pandemic mode for the past 18 months or so, and the market is doing things that no one has expected it to do. Despite the gloom and doom predictions from various experts, the market has persevered. More than that, it has blown up. Residential properties are high in demand and are selling faster than hotcakes, or at least some of them are. There are no distinguishable seasonal fluctuations in sales or prices. So you've heard about the traditional spring market, fall market. Well, none of it really happened over the past little while. What we see instead is a strong market all year long. Okay, so what is going on with the market? Well, here's what we know. The average sale price in Oakville and the GTA has increased by 19.3% from last year. And of course, higher than the previous year, right? So it just keeps going up. The number of sales fell down by 6.9% from last year. This means that fewer properties are selling now than they were a year ago. And days on the market are down by 25%. Averaging 18 days on the market. Okay, so let's be honest. That's a lot of information that you have heard in all media. Actually, you hear that information every month on every radio station, news outlet, and social media. But what does it actually mean? Well, let's take a look. Sales are down. So does it mean that people do not want to buy houses? No, it means that there are fewer properties available for sale and therefore fewer are selling. People are not moving, there's no action, there's not enough inventory, and it drives prices up, but the number of sales is smaller. Now, because there are fewer houses for sale, and because there are lots of people who want to buy them, they inevitably go into a bidding war and end up paying more for the houses. So the demand for limited resources causes prices to go up. Now, this high demand for fewer properties available for sale leads to a faster sales and result in reduction in the number of days a property is on the market. And right now for October, it sits at 18 days. Okay, so a house sells in 18 days, but my neighbor sold in 3 days. And the guy on the radio keeps saying, oh, well, let me stop you there. I can hear your thoughts. So the 18 days is the average number of days a property is marketed on the MLS for sale, and it includes conditions that have cleared. This includes all properties, your detached, your semi-detached, townhouses, freehold that will end up being renovated or torn down, and of course, everything in between those two extremes. And yes, it is still possible to buy a property with conditions, or some conditions in some parts of the market. And no, for real, I mean it, it's possible to do that. But that's topic for another day, another video. Now, depending on what type of a home you have, how desirable it is to the buyers, and of course, location of the property, its time on the market will vary. Ultimately, the sale price will vary as well. For example, detached homes in the 416 area code average $1,784,979 for October, And in the 905 area, they average $1,459,803. Townhouses average $1,025,257 in 416 area and $932,815 in the 905 area. Meanwhile, condominiums average $789,647 in the 416 area and $633,951 in the 905 area code. And that, of course, includes all the 1 bedrooms, the 2 bedrooms, with and without den. So, in other words, everything. Now, one thing I have learned in real estate is that every house is different. Literally, there are no 2 houses the same. Not even if they are side by side, made by the same builder. Just like people are different. Even if they are twins, they're different, and so are their houses. They have different finishes, different upgrades, different tear and wear. In addition to your typical location and size and things like that, there are lots of variables we look at, but they're all different. So if you're interested in knowing how your particular house, how your property is valuated in the current market, contact me, book a consultation up here on top. There's a link and there's another one below, and I'll be happy to chat about that with you. But those are the general averages that I'm talking about right now. Another indicator that tells us a lot of information about the market are months of inventory. Now, for a balanced market, I'll just review this with you. For a balanced market, where buyers and sellers have equal opportunity to sell or purchase a property at what they perceive to be a fair price, and where some reasonable negotiation can happen, is 5 to 6 months. Now, if there are properties worth more than 6 months of inventory on the market, then we have what is called a buyer's market, where buyers dictate the sale, the sale of the property. And if there is less than 5 months of inventory, then we have a seller's market, where the seller dictates the terms of sale. Right now in Oakville and the surrounding area, we have less than half a month's inventory. This means that it would take less than 1 month to sell out all currently listed properties on MLS. And I mean everything that is for sale. And what that means is that we have a super strong seller's market. And that's why the prices are so high. Now, there are a few elements that can alter the market and how things happen. One of the sale price and the number of sales, as well as the price themselves, will be affected. So one way to have an impact is to change inventory, of course, right? Either motivate people to move or increase inventory. So build more houses of various sizes and inject them to the market so that there is buyers have more choices, more people have ability to make the purchase. This will reduce prices and start to lengthen the time in which they sell, and hopefully get us back to the balanced market, which is what I really like, because then everyone is happy. You have happy buyers, happy sellers. Everyone walks away satisfied. And whenever you have strong buyers, strong sellers, someone is unhappy. And I really don't like unhappy people. So another way to affect the market and what happens is to play around with interest rates. If you increase interest rates, then you decrease buyers' purchasing power. And reducing purchasing power means buyers have less money available to spend on the purchase, on buying a house, and therefore automatically there is a reduction in demand. So reducing the demand for housing would reduce prices. It would also increase the time in which it takes to sell any particular property. This auction, however, does not increase affordability. It only artificially slows down the market. So right now, you may hear in a lot of outlets that bankers and mortgage brokers are warning us about potential rates increasing in the spring of 2022. So by April, everyone is predicting that there will be at least quarter-point increase in mortgage rates. Of course, they're not going to jump to 7 or 12% right away, but it will be a small incremental increase. And that will have a negative impact on both buyers and sellers. Another way to affect the market is to change the rules of how properties are sold. And that's something that you start hearing from our government, especially on a federal level, that they're proposing to cancel or actually make right out illegal to sell properties using the existing silent bidding or blind bidding on properties. They want to replace that with public auctions, where every property is auctioned off for sale in hopes that it would reduce prices or make inventory increase. I'm not quite sure what the logic is here. So I just want to review this quickly with you. If you have purchased a property or attempted to purchase a property in the last 4 years and participated in a bidding war, what was the first thing that went through your mind once you heard what the sold price was? Think about that for a second. What did you think about? What was the first thing that went through your mind when you heard what the sold price was? You may have been this close or that close, or that far away from that number, but what was it that went through your mind? Oh, I'm pretty sure, because that's what goes through my clients, my colleagues' clients, everyone who you ever talk to who has lost in the bidding war. They say, oh, I could have done that. I could have paid that amount, maybe even a little bit more. I had that in my budget, but I was scared. I was apprehensive. I didn't know. I didn't want to overbid. I could have done better than that. Well, there you have it, folks. You could have done better. Knowing what the bid was, you would have outbid that bid, and thereby increasing the price of the sold price of the property that you were looking at. And this is the normal thought process and the normal behavior. And when we have no inventory, everyone will bid to the last dollar that they have. And this new system that is being discussed of auction bidding would increase the prices further, and it would not by any means increase affordability. But again, if you would like to know more about this, please comment below and I'll make a special segment just talking about the auctions versus traditional sale process. Now, we have to wrap up. So this mortgage intelligence for this week was just reviewing the latest statistics, sales information for October, and trying to make sense of what it all means. Now, if you like what you hear from me, please click like so that the YouTube can distribute this information to other viewers who might, like yourself, find it valuable. If you want to subscribe to my channel and hear from me more, please hit the subscribe button and I will catch you next time. So thank you for listening. You've been a wonderful audience, and I hope you have some takeaway points from our video today. Take care until next time.